What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. Pretty exciting day. Did close 6.36% in the green. I want to go over some of the current data points, what shorts did, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. And with that, let's get right to it. So overall, pretty successful day. You can see that big money was getting into SoFi. So 58.82 million shares were traded. 55.06 is the average. These are some of the transactions that did occur on the secondary market. So as soon as Powell kind of spoke, you see a huge rush of big money getting in, both on the secondary market and the dark pool. So dark pool is very active, 14.3 million, so a 2 million share transaction right there. And aside from that, just tons of money getting into SoFi, as you can kind of see right there. So overall, I think that was anticipated. This is a quick summary as far as what Powell did say. So ultimately, 3 rate cuts, going to be really following the data. And based on post-meeting, you do see immediately the likelihood for a June rate cut has gone up to 70%. So that's kind of optimistic. So most likely there's going to be 3 rate cuts in 2024, each being roughly about 25 basis points apiece. So who knows, if there is rate cuts in June, that's going to be epic for the broader market. So most likely this optimism is going to carry forward for the rest of this week and possibly into early next week. So I think that's kind of a good thing. For SoFi specific though, no news, no SEC filings, nothing like that. When it comes down to shorts, I'm sure some of you may or may not have noticed my thumbnail saying, whoa, what the fuck, pardon my French. But shorts just, I have no idea what the hell they were thinking about, but they did increase 5.23 million shares today. 19.53% of the free float is being shorted. 178.23 or 27 million shares overall are being shorted. Cost to borrow average is 1.35%. Cost to borrow minimum is negative 0.2. So you do see some signs of manipulation once again. And then utilization is 83.15%. So they lost a ton of money. And not only that though, they are very bold. For it to be at 19.5% right now, there's no logical reason, in my mind at least, for it to be at those levels. But then again, based on the technicals, as I kind of did a video a couple days ago, it did show several signs of a reversal, as though like a bottoming. So all in all, with the positive momentum that's happening in the broader market, shorts are about to lose their asses. So that's kind of a positive thing, if that makes sense. So I wanted to also talk on this, or just play this quick video, only 2 minutes or so of it. But this is kind of talking on Powell and what he's going to be really thinking about for interest rate cuts. So I'm going to play this near the tail end of the video. Today, there was no new analyst ratings, nothing along those lines. As far as options, $6.75 million in calls being purchased versus $2.25 million in puts. Sentiment-wise, 55% of all the options being done today are optimistic, and of the call options that are being purchased, roughly 750 is anticipated, or above 750. Then looking at puts, it is anticipated for it to be sub $7. So that's kind of a good thing overall. And like I kind of pointed out, big money was getting in both through the secondary market and dark pool. And when it comes down to the technicals, with it closing at $7.36, it is between this pivot and this R1. So in theory, it did get past that pivot point of 729. So it is kind of good to continue its run up to around 769. So that's going to be the next resistance point. And on the actual chart, you do see a nice bullish deviation starting to form. So white line above the red. So of course that's good. And plus it is very oversold. So you are seeing that rush of value investors getting in. And this is anticipated. Exactly why I said time and time again over the last several videos. But aside from that though, you also did see retail getting in today. So if you are one of those retail investors that did buy today, raise your hand, give yourself a shout out in the comments below. But aside from that, like I said, it does look very good based on the technicals. Options are looking very good. Shorts, so this information is looking obviously bearish, but they're losing a lot of money. So I don't know, maybe they're just dumb, or I'm not really sure the basis of this. So let me know your thoughts on why you think that shorts would be doubling down. Is it because Chris did state in their Q4 earnings that they were anticipating 4 rate hikes versus now the anticipated 3? Do you think that's really causing some disruption in SoFi, or at least why shorts are increasing, or what's your basis on that? Why do you think that's happening? So like I mentioned, I just want to quickly play 2 minutes of this, because this again will kind of put it in perspective on what Powell will be really looking at in the next couple of weeks. And plus 𝗪𝗧𝗧𝗧 from SoFi is actually on here, going to be talking on that as well.
The S&P 500 lifting to a new intraday record high above 5,200. The prior intraday high around 5189. Of course, any rise today is a new closing high. You see the Nasdaq up 1%. Russell 2000 small caps outperforming up 1.6%. Now, Treasury yields relaxing a bit lower, but mostly on the short end as we sort of get a little more confidence that the Fed anticipates 3 quarter-point rate cuts perhaps by the end of this year. The 10-year moving less, so you see a little bit of re-steepening of the curve. Maybe that suggests that the more tolerance for some warmer inflation. But I would say, in general, Chair Powell talks about the balance of risks between employment and inflation roughly equal, but he's not particularly concerned about any of them. So let's get to Josh Brown. He is CEO of Ritholtz Wealth Management. Liz Young, SoFi head of investment strategy. Just to break this down a little bit, Josh, markets seem to take the absence of any hawkish surprise as a positive. It's like we were in a strong market before. The chair is unconcerned seemingly about the little bit of an uptick in inflation, and so therefore kind of game on.
Yeah, my big takeaway that is really that they're going to slow the pace of balance sheet runoff, which I found, I guess, to be something unique. I also think this...
They're talking about it, but they haven't decided anything yet. But it's definitely an indication.
I mean, slowing the pace of balance sheet runoff reminds me of when Henry Blodgett was posting all this stuff from Hussman. So somebody said, well, you're going to sell your stocks then if you're so bearish? He said, I'm going to stop reinvesting my dividends. Okay. All right, we got it. All right. So that's one thing. Here was the other one. This is a quote. The risk is two-sided. If we ease too much, we could see higher inflation. If we ease too little, we could risk damaging the economy. Okay, thanks. For those people who have not been paying attention to what the balancing act is, there it is. And quite frankly, nothing really seems to have changed to the point on either side of that balancing act to push the Fed. And really, I think we're enduring higher 10-year rates fairly well in the broader market, which is certainly not the purview of the Fed. What the 10-year does, you know they're paying attention. Consider this, Mike. You've got 7 basis points in the last week. You've got 41 basis points year to date. It's a fairly substantial move in the 10-year. Stocks are weathering that really well. So today didn't really give you anything new on that front, and I think the balancing act has to continue.
That is true, although again...
And also on a side note, the small to mid-cap stocks is exactly what analysts have been saying leading into this meeting. We're really just skyrocketing today. So this, again, is going to really help SoFi, I think, bigger picture. So definitely, if you're interested, I can link this in the description below if you wanted to kind of listen to Liz Young's portion of this, which, of course, I think she's really on point with her mentality overall. But I think right now, Powell is doing the right thing. And based on this, people are anticipating a June cut. So, of course, I think that is going to be very good for growth stocks for the foreseeable future. So all in all, let me know your thoughts on SoFi. Don't forget to hit that thumbs up and subscribe. And with all that, appreciate all of you watching.